Hello everybody and welcome to the financial planning update for July 2021. We begin as usual with a brief review of the main global markets and how they've performed year to date. Most major markets posted a gain during July. The US market once again motoring ahead, driven mainly by improving sentiment for US technology businesses, which we'll come back to in just a moment. Unfortunately, the laggard in July was very much the UK market, and we have seen a bit of a drop-off in performance on the FTSE 100, primarily driven by pandemic-reduced anxiety, really. So we've, of course, had the grand reopening date, and you'll notice the drop-off in the market coinciding there with the middle of July, so-called Freedom Day. And I think really Freedom Day was a bit of a damp squib, and of course was met with a few concerns about the pingdemic and about further travel restrictions as well. So we have seen a bit of a drop off in the UK market during July. But the global picture is fairly positive, and we are seeing further improvements in both US and the global stock market. In terms of how that translates into performance, we can see here that all of the portfolios have stayed reasonably steady during July, but are still sitting on fairly impressive numbers year to date and very much in line with our expectations in terms of how the portfolios should be behaving. So a fairly good place to be at just after the midway point in the year, and we've recently made some fairly substantial changes to the asset allocation within the portfolios to account for what's happening in the world as we hopefully start to emerge from the pandemic. And as usual, just a very quick look at how the active and the passive portfolios are comparing. As usual, the two are pretty much neck and neck, very little to choose between them. And the active portfolio has just pulled ever so slightly ahead, reversing the position that we saw at the end of last month. But again, you could barely fit a hair between the two of them, so very close in that respect. So as I mentioned earlier, we're continuing to see a resurgence in US technology stocks, and we've had results this week out of Apple, Alphabet, and some of the other major technology businesses. And these are all really positive results. And they're reporting increased revenues both in hardware, but also software and services as well. So the technology companies are continuing to dominate the market. They're taking up a larger and larger part of the overall stock market. And there are many now that believe there could be a lot further to run for US technology as well. I think it's becoming clear that some of these changes that have been driven by the pandemic are perhaps a lot more permanent than people thought they might be. The shift to working from home, video conferencing, increased use of technology subscription services, these things are all probably now likely to stay with us. And of course, the US tech companies are by and large the beneficiaries of those changes. The one point to mention is that these stocks are incredibly sensitive to market sentiment. So sentiment can shift quite quickly, and these stock prices do tend to be quite volatile when it does. So something we definitely need to keep an eye on, but I think it's fair to say that the long-term outlook for US technology businesses still looks fairly promising. Now, in the next couple of days, you'll receive an email just asking to gather your thoughts on the Buckingham Gate client event for this year. As many of you will know, we tend to host our client event in November, and we do a physical event, and normally that's hosted at the RAF Club in London, beautiful venue. So this year we were hoping to do something in late summer, and really be keen to gather the thoughts of the client base in terms of whether that event should go ahead in person this year, or whether your preference would be for a digital event like we did back in 2020. Of course, we would much rather see everybody in person. We much prefer the physical format. We love mingling with people and speaking to clients. However, we do appreciate that there are a range of different views across the client base when it comes to COVID and the emergence from the pandemic. So be really keen to gather your thoughts. So there's an email going to come out very shortly, and there'll be a simple vote button on there so you can let us know which of those formats you would prefer for the 2021 client event. Now, the final thing to mention is once again we have speculation that the budget could be pushed back from the autumn into next year. And in fact, that would be the third year in a row that the budget had been pushed back, if indeed it comes to fruition. The rationale, as far as Rishi Sunak is concerned, is that we've got furlough scheme now just coming to an end. The government needs to assess the full cost of that. And also, it's fair to say that the fourth quarter this year will be quite an important one as the UK emerges from the pandemic, potentially, or indeed we might find ourselves kind of going back into the pandemic as winter approaches. So there's a lot of speculation now that the budget could well be pushed back into 2022, as has been the case for the last couple of years. So of course we'll watch this space, but it could be that we wait a little bit longer for any major tax announcements. So that's everything for today. We hope you found the update beneficial. And as always, if you need any assistance with your financial planning, please do not hesitate to get into contact with a member of the team. Thank you.